Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Wednesday, January 6th, 2010. Well, folks, looking at the market across the board, we see the market flat to slightly negative on the day. The Dow being down 1 point, Nasdaq being down 10 points, and the S&P 500 down about half a point on the day. Now, we got some ISM data today and some ADP jobs data. The ADP unemployment number came in, or the layoffs came in at minus 84,000. So not a bad number, kind of right on par with what the market expects. Again, that's leading us into giving us the number on Friday, the unemployment rate, the jobs number on Friday, which will be the big number for the week. Now, a couple things to go over right now. You're watching the market essentially trade flat on the SPY. That's exactly what you're seeing there. You can see a little bit of resistance line right here at the 113.70 line, which was yesterday's high essentially. And we got above there briefly twice, actually 3 times, but each time you're coming down. You could even make a case that you have a little bit of a head and shoulders in play here on the SPY if you connected this low to this low. As you can see, it would be a shoulder, head, all right, and shoulder right here, possibly in play. However, the question is there enough volume to cause a reaction that you would expect? And that's the big question. I'm not sure if there's enough volume in this market to really cause a head and shoulder breakdown, but we'll have to watch later in the day. If that's going to happen, it would probably happen in the last hour of trading, I would guess. Now, a couple other things to look for. First of all, volume, as I mentioned, guys, very, very light. 71.5 million traded on the SPY. Really, it's been on par for the week. So far, Monday, Tuesday, Wednesday, we've done just about 110 million on the SPY. I'd say we're pretty much on course for that today as well. Now, a couple things to look at. Number one, let me erase some of these head and shoulder markups just so we have a clearer chart pattern and I can kind of dictate all the key technical points. But what you're seeing is we had that ISM data this morning, which came in line. Jobs data came in essentially in line with a loss of about 84,000 on that number. The market, again, has just been gyrating back and forth in relation to the dollar. The dollar has basically hovered right around the flat line today. And again, we'll give you a quote on that to start out. Down about 4 cents on the UUP. That is off the highs, as you can see. In fact, you're getting a little bit of a dump now to the lows of the day on the dollar. It's still only down about 4 cents, but that in turn is causing a nice run up in oil today. Oil slightly positive, up about 50 cents, and gold is having a huge day. The GLD is actually up $2 on the day. Look at the breakout on the GLD. Now, it should be no surprise that you're seeing this type of move on the GLD to the upside based on the fact that the dollar is falling. Remember, I just showed you that UUP chart, and that UUP chart is actually causing the dollar or gold, again, to spike higher. A couple other things to look for here. All right, number one, let's talk about some key levels on the GLD chart. I have a key level on the GLD daily for resistance, which is at 112. 112 will be your first resistance point. I do not have a resistance point until that point of interest, so keep an eye on 112. If you get through 112 on the daily chart, which is right here, you're going to look for 113 would be your next spot. All right, so those are your two levels to watch on the GLD daily charts of key resistance points, possible shorting opportunities should they get to that point. Now, other than that, let's take a quick look at the USO. Here's your USO continuing to extend that gain. Now, it's right in my wheelhouse for some good resistance here, approaching that 41 level. Anywhere in here, again, I think is a good level to watch for a little bit of a shorting opportunity on the oil front. Very extended chart on the USO, no doubt about that. Couple other things to look for. First of all, Goldman Sachs slightly weaker today, down about $1.50, although it is getting a bid with the rest of the market as the dollar falls. Remember, guys, the market moves inverse to the dollar. So if the dollar falls, market's going to go up. As you can see, Goldman Sachs is beginning to move up as we just showed you that UUP chart. Let me show it to you again. Look at this drop on the dollar. The dollar's getting smoked right now. Absolutely smoked. We just got out the Fed FOMC minutes at 2 o'clock, and that's really what the key is here, folks. As the FOMC minutes have just come out here at 2 o'clock, the dollar is collapsing back down. That's really the key catalyst. With that, the market is moving up. So as the Fed minutes come out, they're basically telling you that the Federal Reserve is not inclined to raise interest rates. If they're not going to raise interest rates, the dollar is going to get weaker. And sure enough, that's exactly what we're seeing. That helps cause a spike in the market. We can take a look at the SPY again. Look at a little bit of a move here up on the SPY. It's not a big move by any stretch, but nonetheless a move higher. All right, let's take a look at Amazon. Amazon is down today. Technology actually is very, very weak. As I mentioned at the beginning of the video, the Nasdaq was down about 10 points while the S&P and the Dow were essentially flat on the day. Well, that's exactly because of Amazon. You see weakness in Apple. Goldman's getting smoked today. Goldman Sachs is getting hammered today. Not Goldman Sachs. Google is getting smacked today on the technology front. Look at this chart on Google, down $15 today. That's a nice little fall on Google today. All right. In addition, again, as I mentioned, Apple Computer down $3. AAPL. Look at this chart. Look at the drop on Apple. Ugly, ugly drop. So technology is definitely taking a break. But what is holding this market up from major losses? Simply put, commodities. Commodities, commodities, commodities. The dollar getting hit again, as we see on this FOMC minutes that just came out. That's causing a spike even higher in oil, even higher in gold. Therefore, ExxonMobil, take a look at Exxon. Look at this move on Exxon. Clear as a bell. You can see Exxon again leading the market higher. So as long as you continue to have that, folks, it looks like you're going to continue to see the market hold up. As long as the dollar continues to stay relatively weak, commodity stocks and commodities inch higher, then that'll be enough to keep this market up to the upside. All right, now a couple other things to go over in this video, folks. Number one, we continue to see some great momentum on some of the plays out there we've called out. We obviously talked about the hidden gem that we released at the beginning of January, 45% gain in 2 days. That was a beautiful play. In addition, ENER hit a high of 1216. I did a highlight report for the Hot Charts and Alerts, our premium members, and gave it to them. And then again, we talked about it openly in the forums that we're in, and nonetheless, ENER, which was highlighted at around $10.85, 88 cents, hit a high of $12.16 today. It's almost a $1.50 gain, and that's again just starting, in my opinion, as it's probably going to squeeze higher even more so. So a couple different plays. Again, we will be releasing more in the Hot Charts and Alerts tonight, as well as in the Pro Trader watch list. Keep an eye on that for sure. They will be big plays, folks. Have a wonderful rest of the day. Keep an eye on this market. Join the Research Center to get access to everything out there under the Research Center, or join the chat room for live play-by-play in the chat room with Chief Market Strategist myself and my partner Nick Santiago. We will be leading things and telling you every move in this market ahead of time before it happens. Take care.